Hey everyone, welcome back to the channel. Today, we're going to be diving into some massive stories shaking up the global economy in 2026. We've got the world's whopping $27 trillion bet on America and why it could be wobbling, the EU's smart move to pause trade retaliation against the US, and SpaceX gearing up for what could be the biggest IPO ever. Stick around because this could change how we think about money, markets, and space. And if you're new here, hit that subscribe button and let's jump in. First up, let's talk about the Sell America trade that's buzzing again. No, it's not a fire sale on stars and stripes. It's global investors getting jittery about pouring more money into US assets. Why? Rising policy uncertainty and geopolitical drama under President Trump, like tensions with Venezuela and that wild Greenland deal talk. Now, what happened? Foreign investors hold a staggering $68.9 trillion in US stuff. Stocks, bonds, you name it, while Americans own just $41.3 trillion abroad. That nets out to $27.6 trillion. The world has bet on the US over 90% of our GDP. It's the biggest imbalance ever. Now, why does this matter? This cash influx keeps US borrowing cheap, props up the Fed's stability game despite huge deficits. But if inflows slow, not crash, just slow, it could hike interest rates, squeeze markets, and make inflation tougher to tame. The Fed's walking a tightrope here. Markets haven't freaked out yet. No big sell-offs. It's more of a slow burn structural worry. Investors are maxed out on US holdings. Europeans alone have $8 trillion stocks and bonds. Financial hits? Higher funding costs for companies, pricier loans for consumers, and the US needs $1 trillion yearly from abroad to balance its books. Last year, foreigners snapped up $1.27 trillion in US securities, fueled by AI hype. But if that taps out, hello, higher yield and Fed headaches. Looking ahead, a mass exodus? Unlikely. US markets are too big and liquid, but a gradual pullback pressure prices and test the economy. The Fed might need to play nicer with global vibes. Bottom line is, the easy money era might be getting conditional. Now let's switch gears to trade. The European Commission just extended a 6-month pause on a 93 billion euros, that's about $109 billion, retaliatory trade package against the US. It was set to kick in February 7th, but nope, they're holding off. This stems from tense negotiations last year, eased by a joint statement in August, and the US dropping tariff threats on 8 EU countries tied to Greenland. Now, why does it matter? It shows the EU prioritizing stability over knee-jerk reactions, keeping bargaining chips without chaos. But it's not cancelled, just suspended, ready to deploy if things sour. And the financial perks? Less uncertainty for transatlantic biz. No sudden shocks to earnings or supply chains in manufacturing and logistics. US and EU firms dodge cost hikes, helping planning and competitiveness. Consumers win too. No extra price pressures on imports, aiding inflation control. For policymakers, it's a savvy balance. Cooperate but stay armed. Forward view, well, expect managed caution. Tensions could flare, but this flexibility might keep volatility low, though trade drama's here to stay as a recurring risk. Finally, the stars align for SpaceX. Elon Musk's rocket empire is eyeing 4 Wall Street giants, Bank of America, Goldman Sachs, JP Morgan, and Morgan & Stanley, to lead a potential IPO that could value it at $800 billion. Plans are fluid, but they're serious, following bank interviews and a secondary share sale. Why is it a big deal? It'd be one of history's largest IPOs, opening the commercial space sector to public investors. After years private, this shifts SpaceX into the spotlight. And the implications? Investors get mega cap exposure, reshaping indexes and funds. It could spark more big IPOs, proving public markets can handle capital-hungry beasts. Competitors face new benchmarks, governments more scrutiny on defense ties. Outlook, it's not locked in, but prepping means they're ready if markets cooperate. This could redefine public listings for dominant privates, spilling beyond space into tech and beyond. Okay, that was a lot. From trillions betting on America to trade truces and space ambitions, 2026 is off to a wild start. What do you think? Will the US keep attracting cash, or is there a shift coming? Drop your thoughts in the comments, like it if this broke it down for you well, and subscribe for more finance deep dives. Thank you so much for watching, and see you next time, and goodbye.